Yo, what is good, YouTube? We are back with another video. If you guys are not in the free Discord, go join it. It is the first link down below. Also, if you haven't voted on the poll that I released on my posts section on YouTube, go vote. I'll leave a link to that on the second link in the description, so go vote. I don't know if I'm going to do it yet, but I want your guys' input just in case I decide to do it, because I have been getting a decent amount of DMs to start doing it. And yeah, so let me know if I decide to do it. I'll take your guys' input on it. Also, I renamed this series to the Trading Den Beginner Series. So if this is your first time on these videos, go to the playlist section on my YouTube and just look for Trading Den Beginner Series. That is what this is going to be. Now, with how many videos this is going to be, I'm not sure. It's probably going to be a decent amount because it is a beginner ICT concepts thing. So to understand exactly how I'm trading, and if you haven't really understood anything because you're a beginner, these videos will help you out. So yeah, if you guys don't know much, start this from the beginning. This is episode 3, market structure. All right, so coming into market structure, this is how you're going to read like order flow and understand, is the market going to be going higher? Is it going to be going lower? How are trends formed, right? So coming in, how are markets forming? Markets form from creating a low, right? So we have a low and we have a high, right? So we have a low and a high. Now the market forms from creating higher lows and higher highs, higher lows, higher highs, and then we can form a lower low, a lower high, lower low, lower high, lower low, and so on, right? So the market forms right here we have a low, we have a high, we have a higher low, right? Right here's our higher low, and we have a higher high, right? It's higher than this high. Right here, low or higher low, up here, higher high. Okay, so that's how a market forms bullish structure. If we are forming a higher low and a higher high, we are forming bullish structure. Now, right here, you see we break this low. So what is this? It's a lower low, right? We break this low. Now it is a lower low because it's lower than this one. And this is whenever you can use liquidity sweeps. Don't worry, I will get into how to understand if it's going to be a liquidity sweep or if it's going to be an actual market structure break, right? So right here, we create a lower low. So what's this? A lower high, right? We create a lower high, lower low, lower high, lower low, lower high, right? So you guys see, this is all market structure is. Right here is bullish market structure. Down through here is bearish market structure. That is how the markets form structure, right? So right here, we just have our monthly chart up, okay? So actually, I don't really want to do it on the monthly because there's not really many examples here. But right here, we can look, right? So what are we doing? Like, we can take a look at this price action right here. In all of this price action, what is this? It is bearish price action. Why? Well, how do we form a low? And how do we form a high? A high is formed by a swing high. Right here, we have a swing high. That is how a high is formed. So how do we create a low? A swing low. Right here, we have a swing low. So we have a low and we have a high. What is this right here? It's a high. So what do we form? We create a low, or we create a high, we create a low, a higher high. So what do we have here? Right? Remember, this is our most recent low. Oh, wait, no, this is, right? So this is our most recent low because this is a swing low. So we have a high, a low, a higher low, and a higher high. So we are in bullish structure right here. What happens here? We break that market structure, right? We close beneath these two swing lows. Okay, so now what do we have? A new low formed. So what's this? A lower low. So what do we anticipate forming? Oops. We anticipate a lower high, right? We anticipate, let me get rid of this magnet. We anticipate this being protected for the time being because we created a lower high, right? And we created what? A lower low right there, right? So these four, right? Swing low, swing high, breaks this swing low and this swing low and closes below. what do we anticipate? Market structure now flipping from bullish to bearish for the time being, right? Let me test this out because I saw, how do you use this? Oh, there we go. This is nice. Okay, so after we form this, what is this? Lower high right here, because we did not break this high. So it is now a lower high and we have a low here. What happens here? We create the lower, or the lower high, and we create another lower low. Right here, breaks this low. What happens again? Boom. Lower high. All right, so now we have two lower highs because this is the swing high that created this swing low. Okay, lower low here, and then what happens? Right, this is our last swing high. We break through this swing high. Okay, this is whenever you can say market structure can now return from bearish to bullish structure. All right, so what happens from here? This lower low, right, breaks this one, flips and creates a higher high. Boom. We close above this high right here. Now you can say to yourself, okay, market structure can now start to go bullish. What happens here? Right, this is our most recent lower low. Boom. Swing low. We create a higher low. Right? Boom. Boom. Right here's our most recent higher high. Right there. Higher high. Right there. Creates what? Another higher low. Boom. Okay? So this is how you're anticipating market going from bearish to bullish price action. And you can do this on all time frames. Right? Right here, another higher low, higher low, higher low, higher high, higher high. Right? So what's this right here? Higher low. And what happens here? We break through these three swing lows. Right? So you could anticipate bearish price action for the time being. Right? Because we have a sweep here. And then we return back down, breaking all these swing lows. But what happens? This is whenever you're going to start using other PD arrays that we have not gotten into, right? So I don't want to give away why we went from boom, breaking all these swing lows, to then returning back to bullish, because we haven't gotten in to all of these PD arrays. This is literally just episode 3, right? But what happens here? We create a lower low, right? Swing high, swing low, and we break through this swing high because we delivered from another PD array that I can't give you guys yet because I haven't made a video on it yet, right? But we break above this swing high, creating another higher high and closing above this high. Low, higher low, high, higher high, higher low, higher high. Boom. Giant, right? Giant market structure, right? We break the market structure to the downside with this closure right here. Actually, with this one right here. What happens? Comes down, takes out this low, we create a lower low, right? So you can anticipate some small bearish price action for the time being, right? What happens here? We create a lower high, and then we come down, and then we create a higher low. Right? So market structure, after we create another higher high, you can anticipate can start becoming bullish, right? So you guys see this price action here. We're not going to keep going over the weekly chart. We'll actually go down to the hourly so you guys can see some more in-depth detail of this. We'll go over this week right here, right? So this is, we'll go from Monday, which is right here, right? What's this right here? A low, a high. Okay, higher low, or sorry, lower high here, lower high here. We can anticipate some bearish price action beneath this low, right? We break through this low, creating a new low, but look what happens here. Higher low, sweeps this low, higher low here, because this is the regular low that we're looking at, right? Higher high, higher low. Breaks through this high, higher high, right? Higher high, right? And then we start getting some bearish price action And then once again, I can't give you guys why we then reversed from here because haven't gotten into everything that I can talk about yet, but you guys are starting to understand how we go from, right, bullish price action to then bearish price action, back to bullish, back to, like, it's just a repeating cycle, right? But obviously it's the stock market, so it's always going to end up higher, right? But right here we have a high, boom, breaks that high, higher high, sweeps a low, higher high, comes down, creates a higher low, creates a higher high, higher low, higher high, right? Lower high, comes down, takes out all of these lows, creates a new low, higher low, higher high, right? Higher high, higher high, boom, we have a low here, comes down, breaks that low, and I can't give you guys why we reversed from here, but we have a new low, or sorry, we have a lower, or a low down here, and we created a higher low here. Higher low, boom, breaks this high, higher high, right? So that's how market structure is formed, by creating low, a high, and then a new low, which is a higher low, and then creating another high, which is a higher high. That's all market structure is. Now, I can't give you guys how you can anticipate whenever we take out lows and reverse from it, right? I can't give you guys that because we haven't gotten into it, right? This is only episode 3. Now, I can give you this. If you guys watched my last video on important fair value gaps, boom, right there, right? I actually took a trade right here and catching this move higher, right? Just because of a fair value gap above a high. That's all it was. Right here, I took this trade on this candle right here, this green up close, because of this fair value gap. That was above a high, right? Now, if we go to the 4 hour, you guys will see it in greater detail again. We have a high here. We have a low. We have a higher high. So what happens? We test the high with a fair value gap there. And then we get giant up close, right? Expansion higher. Okay? So I can't give you guys everything because we haven't gotten into everything, but that's just what market structure is, right? We create a low and a high, and we create higher lows and higher highs. Okay? Then we create a low and we create lower highs, and we can anticipate some bearish price action. Boom, takes the low, reverses, and creates bullish structure. All right? So yeah, like up through here, you guys can see how bearish we were, right? We create a high and a low, a lower high, a lower low, lower high, expansion, lower. Oh, let's wait till that gets removed, right? Swing high here, it's lower than this one, lower high, lower low, oops, lower low, because it's beneath this one, expansion lower, lower low, lower high, lower low, lower high. This is bearish price action, bullish price action, low, high, higher low, higher high, lower high, or sorry, higher low, higher high, sweeps that low. We have a, what, lower high. So this is kind of like, we actually got some rangy price action right there, but right here, we create a higher low, and then we expand through this high, creating higher highs. And then we start that bearish price action, right? So you guys see exactly how market structure is formed. We have a low and a high. Then we can create a higher low, higher high, higher low, higher high. Boom, breaks the swing low right here. Right here's the high, lower high, lower low, and we just keep repeating this, right? So this is market structure, right? This is episode 3. Very simple thing to understand, but I can't get into details on how reversals are formed. Like right here, you guys see we create lower low, but how are you going to anticipate that, this move higher? It's just for later on in the series, right? This is all beginner stuff, so I can't get into every detail in the in certain videos, right? There's going to be some stuff you're going to be like, why did this happen? Why did this reverse from here? But I can't give it to you yet because we haven't gotten into everything. We've only done what is liquidity and fair value gaps. This is market structure. The next one that I do is probably going to be anticipating liquidity sweeps and then getting a reversal, and then how we can reverse from fair value gaps and go target more liquidity, right? Which is up here. Okay? So, this is episode 3. Drop a like if you enjoyed. If you guys haven't watched the other episodes, go to my page, go watch the Beginner Trading Den series. I'm out of here. Peace.